Hello, I'm Mark Abssy, Head of Indexing at Tematica Research, and welcome to the week ahead. So this past week was actually pretty good. We saw some movement here in both the indices. Everything, of course, is hitting fresh new highs, all-time highs. The other area which is starting to hit some all-time highs, of course, is Bitcoin. We saw Bitcoin cross $100,000, and basically that's all on seemingly Trump's decision to appoint Paul Atkins as the next SEC chairman after Gary Gensler. Now for those of you that follow crypto, he was down in Miami a little while ago and got the crowd on their feet saying, hey, the first thing I'm doing is Gensler's out. And it looks like he's trying to line up at least one candidate to fill Gary's shoes once he is able to replace him. Another thing that's going on too is that Mag 7 names, they're starting to come back to life a little, and if you bear with me, I'm just going to run through some quick numbers. So the Mag 7 names are represented across three sectors in the S&P 500. Okay, you've got Alphabet and Meta in communication services. You've got Nvidia, Microsoft, and Apple in technology, and then you've got Amazon and Tesla in consumer discretionary. All right, so those three segments. Those three sectors account for 50% of SPX. Now, when we do some attribution over the past week and we look at what those names individually contributed to their sectors, this is the breakout we get. Meta and Google contributed to 124% of the returns of communication services. Nvidia, Microsoft, and Apple contributed to 60% of the returns of technology sector, and Amazon and Tesla accounted for 107% of the returns for consumer discretionary. Now, what happens with that is if we do some math on what those sectors returned and what those contributing factors were, we find out that Mag 7 effectively contributed to, well, not contributed to, but generated a little over 10% in an average return over the period. Okay, so over the last week, if you held Mag 7 names, you were up 10%. When you look at SPX as a whole, that index was up 96 basis points, right? It was up 1%. So when we talk about, Mag 7 driving markets, right, we're certainly not talking about it in an economic sense, right? Although some may have an argument to make there, right? But really, we're talking about, like I say sometimes, is if you're at a poker table, the big stack is pushing the table around. That's exactly what's happening here. You have these super mega cap names, and anything that they do is amplified just by the sheer amount of weight that they have in these indexes, right? The Mag 7 sectors are 50% of S&P 500. The Mag 7 names themselves are something like a little over 50% of the weight of the NASDAQ composite, right? So when we talk about how tech is your friend, what we're really talking about is, those 7 names and the impact that they're having on broad indices. And you see this all the time where the indices come out in order of NASDAQ first, S&P 500 second, Dow third, and Russell 2000 last, and at least among that group of 4. And oftentimes, most of the time, it just comes down to how much technology exposure that they have. So, sorry to take you down that little rabbit hole, but it is something to be aware of. It's something to keep in mind, kind of when you're talking about indexes, especially in this day and age when everything's hitting a record high. You really need to look a little under the cover and see what's really driving that. Now, when we look to next week, we do have some important earnings coming out. C3AI, Oracle, MongoDB, Adobe, Broadcom. Those names are going to give us kind of a broad picture of what's going on in tech land. Some of it's going to be focused on kind of the databases and AI, some of it on equipment. And again, we're paying attention to that because these are the companies that are kind of the picks and shovels guys of what's happening in the exciting parts of tech, right? In data centers, in AI development. Of course, not to be left out of the picture is our favorite wild child, GameStop. They're going to be reporting as well. And then on the consumer side, we're going to see Toll Brothers is going to be reporting, and it's interesting to see not only what they've been doing. They of course are known for more of kind of as a higher end home builder. So it's interesting to see what they have been seeing in the market so far, and of course what they're forecasting to see coming into 2025. Also on the consumer side, of course, Costco, which is always an important, some important numbers to get for where consumer spending going, and it's not lost on us that Costco gets the bulk of its revenue really from its membership. Or it's more of kind of a subscription service company than it is kind of a wholesaler of goods and some services, I guess. But still, they are a bellwether for the consumer and what they're doing. And then finally, Vail Resorts is also going to be reporting. So we're going to see we're going to see how many folks are putting skiing on their to-do list for this coming season. Now, aside from those earnings, what we're really looking for are the CPI and PPI updates, right? And those are going to come out CPI on Wednesday, PPI on Thursday. And what's been interesting to us and what we've been tracking, of course, is this moderation of inflation over the last year. When we really look at it, it's been primarily driven, certainly on the PPI side, it's been primarily driven by energy and oil costs. Okay, we have seen that, in fact, in the last 9 of the 12 months on a month-over-month basis, energy has been declining in 9 of those 12 months. So that's certainly something that we are keeping an eye on and looking for kind of more of that. Hopefully that'll start to trickle into the other goods and potentially services that PPI cover. And again, for the combined number there, it's really been services that have been pushing the needle in terms of the bulk of the number. When we look at the goods side, those increases have been kind of in the tens of basis points. When we're looking at the service side, that has been the 2.5, 3.5 range. On the CPI side, a lot of the picture is very similar to PPI, in that it's really been energy that has been driving this moderation. Now on the CPI side, of course, we also have new and used vehicles that has also been coming down. And again, this is a trend we've been seeing over the last 12 months. So, bottom line with PPI and CPI for us is that we're not expecting anything, any surprises, right? We have been seeing these trends. These numbers generally have been holding steady pretty much. When you look at PPI on the services side, we did see a dip into kind of 1.9 and 2 in August and September. We went back up to the kind of the 3 to 3.5 range, and that seems to be where we're kind of sitting, right? Now, of course, CPI and PPI, the inflation number, not to mention, of course, the employment figure that just came out at the end of the week. These all tie into Fed speculation. What is the Fed going to be doing? How aggressive or dovish are they going to be about cuts? Now, when we look at the Fed funds futures curve right now, it's saying that there's an 85%. It's pricing in an 85% possibility of a 25 bip cut on the 18th. Okay, I think a lot of folks are expecting that. When the Fed started, when the Fed made their first cut, I think folks were surprised that it was 50, and there were lots of stories about, the last time that they cut 50 at the beginning of a cycle, it was not good for anybody. Honestly, so far, things haven't been that bad, and so we'll continue to keep an eye out there. When we look further out in the curve, we see that 2025. Fed funds futures traders are basically pricing in about 75 basis points of decline, and I think it's safe to say that that's going to happen over 3 cuts. I don't see any reason or rationale for the Fed to do another 50, and I mean that's pretty much it, right? So looking for another 25 by the end of the year through 2025, looking essentially for 3 cuts. And it's just a matter of when they're going to come, when the Fed feels that it's appropriate to do so. So, basically, when we look at what's going on for next week, again, CPI and PPI. We're going to keep an eye on energy. One of the things that happened late last week, part of the sanctions against Russia with regards to oil and gas is has to do with their payments and receipt of payments, and the preferred kind of collector of payments is a Gazprom bank. And late in the week, Putin made a decision to allow other banks to participate in receiving payments for Russian gas. And kind of a lot of hay has been made about how China and India are basically buying Russian gas and reselling it. There are other countries that have been purchasing Russian gas, and this will basically open up other venues, possibly for more to come on. And essentially, what it does is kind of does a backdoor supply increase, which of course puts downward pressure on prices. So we have seen both West Texas and Brent come down. I think West Texas crude on the week was down about 1.6, and Brent down, I want to say close to 1.8 to 2% maybe. But the point is that those downward pressure on oil and gas, of course, is welcome by consumers. It's welcome by inflation hawks. Not so welcome by energy investors. Energy was the worst performing sector this week. I think it was down a little over 4%. And so we're keeping an eye on that as well. So that's it for now. Thanks for joining, and we will see you next time.